Two-day sell-off sees cryptocurrencies shed $100 billion. President Biden was inaugurated yesterday with all major U.S. indices hitting all-time highs. Faang stocks are finally popping after a quiet start to the year, and MIT develops lab-grown plants. All this and more in today's first episode of Market Recap, plus some dividend news. I'm Longacres Finance. Let's go. Bitcoin slipped 10% over the last 2 days, dipping below the $32,000 level. This spurred all cryptocurrencies to follow, shedding $100 billion in value from the asset class. Bitcoin has been on a wild ride in the last few weeks, hitting a new all-time high just shy of $42,000 recently. Treasury nominee Janet Yellen criticized the use of cryptocurrencies by linking them to illegal transactions, adding to the recent sell-off. However, there is more and more interest in cryptocurrencies from large institutions. Blackrock, the largest asset manager in the world in terms of assets under management, has filed prospectuses for 2 of their funds to have the option to buy Bitcoin future contracts. They are not the first large institution to make a move into cryptocurrencies, nor will they be the last. Of course, you don't have to go far to find the naysayers waiting for the Bitcoin bubble to pop again. Are we in a bubble, or is Bitcoin going to hit $100,000? Time will tell. Joseph Biden was sworn in as the 46th President of the United States yesterday. His inauguration was met by new all-time highs from all major U.S. indices. The last time markets hit an all-time high on Inauguration Day was 1997. We all know what followed. Some pundits are claiming we are in the biggest bubble of our lifetime right now, and maybe they are right. But will we see a similar euphoric rise as we saw during the dot-com bubble first? If you're enjoying the content, please help promote this video by clicking the like button, and make sure to subscribe to the channel to be notified of future episodes. Jack is back. Jack Ma, that is. He's one of the most well-known Chinese entrepreneurs, founder of Alibaba and co-founder of Ant Group. Since early November 2020, he fell off the grid, following China pulling Ant Group's $35 billion IPO and tightening down on Chinese tech companies. While the world can stop worrying, Jack made an appearance on Wednesday in his annual event to award rural educators. Believe it or not, but Jack started out as a teacher himself. Shareholders of Baba were pleased to see their leader, as reflected by the stock price climbing over 5% on Wednesday. Faang has finally arrived in 2021. After a slow start, all 5 tech giants have seen a few decent days in the market. The credit probably has to go to Netflix, who missed their earnings, however posted higher than expected revenue and subscriber growth for Q4. The stock popped over 15% on Wednesday. On the news. On a year-to-date basis, Netflix leads the pack, up over 8%. Google is up over 7%. Amazon and Apple are flat, and Facebook is still down 2% year-to-date. Researchers at MIT have come up with a way to grow plant tissue in the lab. The process will be able to grow plants and wood fibers, alleviating the necessity to harvest either from the environment. While the benefits to the environment could be substantial, the process is still in its infancy, and we are a long way from creating 2x4s in the lab. Definitely something to keep an eye out for in the future. The lab-grown meat market is still very young, but it has gained a lot of traction and interest in the stock market. Artificial intelligence may take over the world one day, and it has already encroached into the stock-picking game. IBM's Watson AI supercomputer is now picking stocks to outperform the market. And while it's not getting the absolute best return thus far, I'm sure it's learning and getting better by the minute. EqualBot is leveraging this tool to fuel their AI-powered equity ETF, ticker symbol AIEQ. It was up over 25% last year and has an annualized return over 15% since inception. Here are the 7 stocks Watson picked to outperform in 2021. Tesla, Advanced Micro Devices, Enphase Energy, Alphabet, Moderna, Zscaler, and Etsy. Let's switch over to some dividend news, and we will start with some recent dividend increase announcements. First up, Fastenal raised their quarterly dividend by 12%, from 25 cents to 28 cents quarterly. This increase is in line with Fastenal's 5-year dividend growth rate of 12.3% and falls shy of its 10-year growth rate of 17.41%. Blackrock, after posting excellent earnings recently, decided to share some of that profit with their shareholders in the upcoming year, announcing a 13.8% dividend increase. The new quarterly payment will be $4.13 per share, up from the prior $3.63 per share. This dividend hike is larger than the 5-year dividend growth rate trend of 10.74% and in line with its 10-year dividend growth rate of 13.76%. Wisconsin Energy Group also raised its dividend recently by 7.1%, from 63.25 pennies to 67.75 of a penny on a quarterly basis. This keeps them in line with their 5-year dividend growth rate of 7.74% and continues the downtrend of the 10-year growth rate from 12.2%. I own all 3 of these companies in at least one of my portfolios. Additionally, they are currently on my quality and high dividend yield watch list for January. The high yield watch list is currently up 2.43% year to date, with the best stock thus far being Huntington Bank. which is up almost 13.8%. The poorest performing stock is Pepsi, which is down 5.03%. The fairly valued and undervalued picks from the high-yield Watchlist are up 2.54% year-to-date, and that portfolio has the same best and worst individual stocks as the whole Watchlist. The Quality Dividend Watchlist is down 1.26% year-to-date. The best individual stock thus far has been Lowe's, which is up 7.21%. The poorest performing stock has been ADP, which is down 8.45% for the year. The fairly valued and undervalued picks from the Quality Dividend Stock Watchlist are down 3.07% year-to-date. Home Depot is the best position, up 4.85%, and ADP is the worst position, down 8.45%. Each Friday, I add additional capital to my M1 Finance Quality Dividend Stock Portfolio. It's still in its infancy, with about $400 in market value. Each week, I add an additional $15 to the account. At this pace, it'll take a long time to build this portfolio into a substantial amount, but I have plenty of time left in my investing career. This portfolio is just a fraction of my overall invested assets, and more of a hobby investment to put my ideas into practice. I will be sharing the portfolio here with you in all future videos. Here are the stocks I will be adding capital to tomorrow: Comcast, JP Morgan Chase, Progressive, Schwab, TJ Maxx, United Healthcare, and US Bank. I think all of these companies are either fairly valued or undervalued currently, and they all happen to be underweight positions in my portfolio. Thus far, the portfolio has received 18 cents in dividend income in 2021, and a total of $1.40 in dividend income since starting the portfolio in late 2020. The current projected dividend income for the next 12 months is $5.96. This is up about 19% from the last month's projection. The portfolio has a cumulative return of 4.52% since inception on September 1st, 2020. I would like to see the portfolio grow at an annualized rate of 10% over the long term, and at some point in the future provide a decent monthly dividend income. Thanks for watching. See you next time.